G'day folks, Jim here from FX Charts, Friday the 14th of March. Thanks for tuning in. Well, it's been a pretty hectic session all round really today, starting with the RBNZ rate hike yesterday, followed up by the Aussie jobs numbers, which were pretty left field. And then later in the day we got the euro heading to 2-year highs. Stops drove that higher, and at the same time pushed the Swissy to multi-year highs as well. And after that, risk aversion really seemed to set in as the Russian situation seems to be escalating, with Russia not really backing off at all. And then later in the New York session, Mario Draghi was making some comments, and he put the euro back in its box really by suggesting that the exchange rate is becoming more relevant as the ECB tried to kickstart the euro economy. So anyway, we're going to have a look at the charts, and as you can see here, the euro it was trading quite happily around 139, and then late in Asia, stops got set off, triggering it, sending it higher. It eventually broke the 139.50 barrier, got up to a high of 139.66, I think it was, but it couldn't sustain that, and it came off pretty sharply once Draghi made his comments. And it's come back down here to this first FIBO support, just around 138.5. It's sitting above there at the moment. It's sitting right between the 100 and the 200-day move, 100-hour and 200-hour moving averages, and it wouldn't surprise me to see much of Asia really contained in between those two. The hourly indicators are pointing lower, and the 4-hourlies are also pointing south. So I think on the day that rallies will probably be a sell. And I'd be surprised really to see us get back above to 138.90, 139. So I'd be happy to sell there with probably a stop loss above 139.15, looking for a return back down to 138.5, and then possibly down to this sort of 138.30 area, which was the original breakout. And then we've got this support line down here. We can see that better on the longer term charts, but that's down around 138 to 10.15. Down there, and then below there we've got support just up below 138. We've got this sort of rising trend support coming in here. If 138 does go, the eventual target would be down here around 137.75. I'm not sure we're looking to see that yet, but as I say, the 4-hour charts are pointing lower. The dailies though pretty non-committal, so I just think that we're probably likely to have some fairly choppy but probably directionless trade. I do think this might have been a bit of a medium-term top, but as I've said before, if we do head above 140, then we're probably heading towards 142, but I don't think we're ready for that yet. And if anything, we might come down here and test this 137.75 level, albeit maybe not today, although it's Friday, so there might be some some covering of long euro positions, which could pressure the downside if Russia blows up over the weekend. So that's one thing to watch. Dollar yen, well, that's come down. The safe haven trade came back into force with some gusto today, and it's come down here to sit on this long term, or medium term I should say, support line. We can see that better on the 4-hourly charts. Actually the dailies are probably better. So it's come down to sit down here. Now that's at sort of 101.5. So if we do break this rising trend line, then I think we're probably headed back down to here. This is 101.20, this low here. And below there, then we're going back to the recent low at 100.75. Not sure we're headed down there today, but once again, there will be concern over what might happen in Russia over the weekend. So I think the upside for the dollar yen today is probably a little bit limited. We have got the BOJ minutes coming up, and we've also got Japanese industrial production. I don't think that's going to affect the market too much. But if we head back up to the top side, there's going to be some resistance at around 102, then 102.20, which is where the 100-day moving average now lies. It's the orange line there. And then we've got some Ichimoku resistance as well, but I don't think that's going to come into force. 102 I think will probably cover it on the top side, but we could see a squeeze to 102.20, potentially I guess to 102.40, but I really don't think we're going above there today. And the momentum indicators suggest that if we do head higher, Well, the dailies are flat, as I say, but the 4 hours they're looking slightly negative at the moment. Nearer home, though, the hourlies are turning up, and so with this 101.65 area, 101.50, that might provide a base on the day. Probably, therefore, we're looking at 101.5 to 102, possibly 102.20 range trade. But at the end of the day, I'd want to be pretty square going into the weekend. I wouldn't want any risk either way before Friday's close. Sterling, that was pretty choppy. It did get up to 167.15 or so. It came back down pretty sharply after Draghi spoke, and we're in this nasty choppy consolidation here. So I actually think there's better things to look at than sterling. If anything, though, the hourlies are slightly negative. The 4 hourlies are not really showing much either way. As I say, I'd stay out of it because I think really below 166 we've got bids down here. This 165.70 where it got down to yesterday. The 167, I think that's probably likely to cover it. The dailies, what are they looking like? They're looking as though they may have some slight downside, but we got this nasty spike up here again today, and all up. I'm not really too bothered by. If we come down here, this long-term rising trend support at about 165.10. Actually, we can see that better on the 4-hour chart. So if we broke that back down here below this 165.70 level, then we'd run into support about 165.30, 165.10. But right now, as I say, I'd leave it alone. Dollar Swiss, well, that had an interesting day. Traded beautifully down to our support that we mentioned yesterday, 87 a figure. I think actually 86.98 was the low. The base of the channel. It bounced then after Draghi's comments, and it's sitting around. It's actually sitting around yesterday's close at the moment. The 4-hour charts look as though they might have turned a little bit higher. So we might have seen a bit of a base, and if we can head a bit higher, we might head up towards the top of the channel here, about 88.30. I wouldn't be placing too much in it either way. I don't think right now. The daily charts are still negative, and of course we've got the base of this channel down here around 86.30, which we've spoken about before. But it does look as though in the short term we might have seen a bit of a base, and I wouldn't mind buying dips really with a stop loss probably below this sort of 86.90 area, but looking for a run back up to 88.20 or so. The Aussie, well, after that jobs number yesterday, which took me and everybody else by surprise, it got up to a high of 91.03. Let's have a look at the hourly charts. It was pretty choppy. It soared higher after the jobs numbers. The softer Chinese data didn't do it much favour. It came back down after the industrial production, retail sales, all that sort of stuff. But it did get up to 91.03 as a risk looked to be a good bet, but that all turned pretty sour later in the day. And it's come back down here, and it's found support in the 100 and 200 hour moving average down here around 90.10. It's squeezing a little bit higher at the moment, but the 1 hour charts aren't looking that positive. So I think the upside's probably limited, maybe 90.50, 90.60. I don't think we're going much above 90.70 again today. And the 4 hour charts, though, they look pretty stable, I should say. So I think we're probably in a range trade today. I'd be surprised to see us get back much under 90, 89, 85. I think we'll probably hold it. While on the top side, as I say, 90, 50 to 90, 70, I don't think we're going much above there. Further out, the dailies are looking pretty non-committal as well. And maybe that we just, this 100-day moving average here, that's down around 90.5 at the moment. And I think we could probably use that as a bit of a pivot over the next couple of days while the Aussie wants to make up its mind which way to go. I'm not entirely sure that we're done with the top side yet. If we can break this sort of 90, 70, 80 level again, certainly if we break 91.30, then I think we could be headed quite a bit higher. But right now, that's not looking all that likely, but it's worth just keeping in mind in the background. Kiwi, well, the comments from the RBNZ governor that there's more rates to come after yesterday's rate hike, that took a solid run higher. Europe took it up to just above 86 cents, but as risk sentiment soured, that came right back down here to sort of 85 and a quarter. It's a little bit higher now, 85.40, but it looks to me as though we're going to have a range trade day. As I said, with the Aussie, the hourlies aren't conducive to any run up to back towards the highs. The 4 hourlies look as though they've turned over, so it wouldn't surprise me now to see a sort of 85, 86 range trade for the next couple of days. But the long-term trend still remains higher, and given the outlook for more rate hikes down the track, I think if we do sit down around this trend line 84.80, 84.70, that's probably not a bad medium-term buy. The dailies look as though they're pointing higher, and the weeklies equally, they look as though they're picking up some momentum. So I think further out the outlook looks okay for the Kiwi, but in the meantime, some range trade between 86 cents and down here to 84.70. But on the day, I think probably 85.70 down to 85.10 or so probably covers it. The first FIBO support's down here. That's not till 84 3/4, and I don't think we're going down there today. So that's really about it for the week. It's going to be a choppy day. I think risk averse sentiment will probably cover it going into the weekend. The equities markets look soft. Have a look and see what the Nikkei does when that opens up later on this morning. But the US indices close lower, and I think that'll probably govern trade going into the weekend. Some yen strength wouldn't surprise. And I don't think the Aussie, the Kiwi, or the Euro are going to see yesterday's highs again today. So that's about it for today. Have a very good weekend. Keep your stop losses tight, and talk to you on Monday. Cheers.